US inflation accelerated for a second straight month in November 2024, reporting the steepest gain in the last 7 months, driven by higher food prices and other sectors as well. Despite this, Wall Street continues to place bets on another interest rate cut by the US Federal Reserve, with the policy verdict expected next week. According to the data, consumer prices rose slightly higher last month. The US Consumer Price Index increased to 2.7% last month from a year-ago period, up from 2.6% in October, aligning with economists' expectations. We have a very special guest joining us this morning, Gaurang Shah, Senior Vice President, Geojit Financial Services. Good morning, Gaurang. Welcome back on the show. First cut reaction, US inflation coming in steep, but expectations of rate cut not dwindling. What are your expectations and how does this impact India?
Thank you very much and morning to all of you all. Well, so I think Mr. Powell will do what he has to do, but we don't have to forget that come Jan and President to be Mr. Trump will be assuming the Oval Office, and what he has said during the campaigning and before the presidential election is that he's going to lower taxes and increase tariff. And if he's going to actually do that, then that's going to lead to a very difficult situation for Mr. Powell in terms of the rate cuts that he had announced earlier this year. Because if Mr. Trump has to do what he has to do, then I think that will lead to a spike in inflation. And in that case, rate cuts would be a very difficult situation for Mr. Powell to handle.
Absolutely.
And I primarily don't think that we have to ape what the US does or any other country does. US has their own set of problems. We have our own set of problems. And in the recently concluded RBI policy, the outgoing governor, Mr. Das, has mentioned that he expects the growth to come back. I'm talking about GDP growth and inflation to taper off as and when we go into the next policy meet.
So stay with that thought, Gaurang, because India inflation numbers are also expected today. In fact, India's retail inflation print is likely to come in at 5.5% for the month of November. And this, according to economists surveyed by various publications, likely to be down from 6.2% in the previous month. Now, food prices continue to be high. Seasonal drop in vegetable prices notwithstanding, Gaurang Shah, if India's inflation also comes in as expected, while under 6% but over the RBI's threshold of 4%, with the new RBI governor in charge, what do you expect India to do? Leave aside what the Fed does.
That's what exactly I was trying to say. So if you allow me to complete, I think inflation has down to 4.5 or 4% for meaningfully a monetary policy committee and for the governor to introspect and think about rate cuts. According to us at Geojit, I don't think we're going to see any rate cuts in India before March 2025. This is going to be absolutely data dependent. That's what the governor has also mentioned.
All right. Well, like I mentioned, the new RBI Governor Sanjay Malhotra emphasized the importance of ensuring stability and continuity in policy making while remaining alert and agile amid the current global and political uncertainties. Well, after taking charge yesterday, Malhotra highlighted the necessity of maintaining continuity and stability while being adaptable to meet these challenges. Now, when we talk about these challenges, Gaurang, I want to get your view. Of course, we understand what is happening globally, and the inflation problem in India continues to be a supply side problem, not a demand side problem. So while you're saying a rate cut perhaps in the February Monetary Policy Committee meeting may happen, what really happens to inflation after that? And how should retail investors be watching their positions right now in the skew of news which is coming on both inflation and rates?
So slippage is the biggest reason for the inflation to spike up. Of course, we have had good monsoon this time. Expect the agri produce to be at a reasonable level than what we've seen earlier. And that will primarily bring down your food inflation related triggers that we were facing up until now. And in terms of other data points, I think as and when we have a little bit of more stability coming in, my sense is that we should be in a better position. Not that we were not, even in the past, if you actually go to see, we stood out a little bit differently compared to the emerging markets and the developed markets when it came to interest rates, inflation, and of course the GDP growth rate. So for the short to medium term, we are having a difficult situation. But we don't have to react to these numbers from a short to medium term point of view. I think long term numbers is something that we'll have to consider.
Okay, so long-term numbers, but at the same time, Gaurang, the Indian rupee has touched a record low yesterday, hitting 84.86 against the US dollar. Now, on the volatility of the rupee, the depreciating rupee, and all this coming as the Chinese yuan is also weakening, the dollar is becoming stronger. From a currency perspective, what kind of interventions will you expect the RBI to take? Will we continue seeing the changes in the forex reserves as the RBI has been doing? Is this also something that you're reading into what Sanjay Malhotra has said yesterday?
Well, absolutely. And I think at its historical lows, rupee against the dollar. And the dollar strength is not only against the INR, but it has been there against across currencies. Possibly we are in a little bit better shape than what the other currencies are doing. There is limitation to support the rupee against the dollar in terms of strength, either be it dollar supply from the central bank or the other banks. And I don't think there will be extraordinary supply coming in, keeping in mind the situation that the dollar is in. So I think this is something that will lead to a little bit of more, measured steps taken by the central bank as well as other banks. We'll have to just wait and watch. And for US also, it is not really favorable to have such a strong dollar in terms of where their economy is.
Right. So I want to just spend a little bit more on the sliding rupee, Gaurang, and I want to understand what is going to be the impact on India's IT sector. We haven't seen the best year 2024 yet, with 2025 around the corner. With the rupee sliding, with the dollar strengthening, what kind of an impact do you see on India's IT sector?
So there has always been this thought process that not only IT but even pharma, because pharma is also exposed to large part of their turnover going across the Indian boundaries and especially in the US and the rest of the world. And it's not like these sectors, IT and pharma, keep their dollar position open. They hedge their position also to a certain extent. But with the dollar becoming strong, I think there will be a little bit of tailwind positive on the earnings front for both IT as well as pharma. And as a brokerage house, we at GeoJet have been positive on IT and pharma for a pretty long period of time, and we continue to remain positive on IT and pharma.
Okay, and just help me understand this, Gaurang, even from the perspective of of rate cuts possibility continuing in the US. How does this augur on discretionary spending of companies in the US when they shore up their order books in favor of India's IT sector, and hence what would that do to job creation in the IT sector in India?
So there are a lot of things, the issues with the statements made by Mr. Trump in terms of the visa. We heard how he wants to make America great again. We've heard what he wants to do in terms of restrictions for citizens coming from other country into US, whether it is skilled job or whether it is otherwise. But the primary thing is with these two sectors, pharma and IT. With the kind of capability and capacity that India has, it's going to be very difficult for any other country to independently mark those kind of levels or any other country to come and compete with India.
Right.
So I think that time we should be in a sweet zone.
All right. Well, stay with me, Gaurang. Let's move on to commodities now. Oil prices rose slightly early on Wednesday, with market participants expecting to see demand rising in China next year after Beijing announced a loose monetary policy to stimulate its economic growth. By early trading, Brent crude futures were up 10 cents to $72.29 a barrel, while US WTI gained 9 cents. According to analysts, China's policy shift could be a key factor driving global oil demand in coming months. And on that breath, let's also talk about gold. Gold prices have surged past 78,800, hitting a 2-week high as geopolitical tensions and anticipation of the US Federal Reserve rate cut next week drove investor demands. Gaurang, I want to understand from you the impact on India, rising oil prices, rising gold prices, the impact on the Indian economy and the impact on Indian investors.
So if I'm not mistaken, we are the second or the third largest gold consuming country, correct me if I'm wrong. And we continue to do that. as we go forward. Though the thought process, which was earlier, has kind of reduced, but we still like to hold gold in our portfolio. And as a fundamental analyst, I have always advised that gold is something that you need to invest in, not from a 1 year perspective, but 3 year, 5 year perspective. And the best move to do is gold sovereign bonds, which the government is doing a rethink right now. And the
Yeah.
other alternative is, of course, gold ETFs.
Right.
It is a natural commodity. It will get extinct at some point of time, the way world across mining is happening for gold. And don't over depend on it. But yeah, some allocation is there because you have to distribute your capital into different baskets so that you're not exposed to any kind of single risk by investing a large part of your investable money into a single asset class. So we remain positive, but a small portion of your portfolio should be in gold. For crude oil, I think the good part is that even during the bad times, India could manage its requirement as far as energies in form of crude oil is concerned from Russia at a discounted price, and to a certain extent with Iran in terms of the bilateral trade that we have with these countries.
Right.
Local dominated currency trade was there; it was not dollar dependent, and I think we'll continue to do that. More than China, I feel just China. You need to take each and every news with a pinch of salt. But my worry is the geopolitical situation. We recently had, I think, the situation in Syria. Before that, we know what has happened to Israel, Iran, Hamas, and then before that, Russia and Ukraine. And if we have more such unpleasant geopolitical situations unfolding in the Middle East, and if the global pipeline is disturbed in any way, then there could be a very huge spike up in the crude oil prices, which may lead to difficult situation for countries like India, which
Right.
are largely dependent on import of crude oil.
Absolutely. India continues to be dependent on imported crude oil, and that has a bearing on the fiscal deficit. We'll have to wait and watch to see if Finance Minister Nirmala Sitharaman makes any adjustments to the fiscal deficit target in her upcoming budget 2025. Gaurang Shah, thank you so much for joining us early this morning on Morning Brief at 9.